Looking at real estate prices in the US and Canada, we can see that it has become literally unaffordable to the majority of people. The so-called middle class is vanishing as inflation silently wipes away hard-earned savings and makes common needs much more expensive. As central banks increase interest rates, this will only get much worse. You came here for the truth, so let me unveil that for you. Today we're going to talk about real estate in Canada, the US, but I'm also going to cover other places around the world, so stay tuned. I got people all over the world asking me, do a video on this country, do a video on that country. Well, I'm going to show you some in just a second here, so hang in there. Let's begin by taking a look at the US. Existing home sales month over month decline 4 times in a row. We're in negative territory here, and that's never a good thing. This could definitely reverse. We've seen it happen before. However, these are the factors which we need to be keeping an eye on. All right, so that's existing home sales. Let's take a look at the home builder stocks, which along with most other stocks have moved down significantly. So you're seeing that here along with other stocks, late January, they hit the peak and have come down ever since. As I said, this can also reverse, but at this time throughout the year so far, we're already in August, this could just continue to head downward. So I'm looking at this because we can say that prices are extremely high today. That means home builders should be doing very well, but it's not the case. It doesn't work like that. The price you see on those homes doesn't necessarily equate to home builder stocks. What does that say for the economy itself, for the jobs involved, the electricians, the carpenters, the materials that are needed, industrial commodities, and so on? All right, the home buying conditions have been very, very weak right now for the past few years. So after the financial crisis, housing crisis, we had investors coming in, buying up homes. At the same time, they were giving the stimulus packages. Mortgage rates were very, very cheap at this time. So it got that going again, got people buying, okay, whether they should have been buying or not. And then that stimulus ran out, okay? The steam sort of ran out, and ever since, in the past few years, it has been declining according to the home buying conditions here, right? So it's becoming too expensive compared to the average person and what their salary are, the household income. And throughout 2018, in fact, it's actually been getting much worse. Okay, so looking at this, talking about Fannie and Freddie, okay? These are two institutions. They have their name written all over the housing crisis, is tattooed on there. The government-sponsored enterprises that help lubricate the U.S. mortgage market will stop backing loans for single-family investments homes in a nod to the growing controversy surrounding that marketplace. Now, I got a problem with these two companies. The U.S. government took them over, putting trillions and trillions of dollars of bad debt onto the backs of the taxpayers. All right, so if you're living in the US, you're carrying Fannie Mae and Freddie Mac on your back. Okay, that's not a good thing because it's not as if it's, the highest quality debt out there. We're talking about things that, partially led to the problem that we experience on a global scale. So think about that for yourself. Now, these are two institutions I believe that just shouldn't exist, okay? If somebody is unable to afford their homes under normal circumstances, then they should just rent. There's nothing wrong with renting. I mean, many wealthy people rent their homes. It's not a simple matter of fact, well, if I can't afford it, then I'm going to have to rent. It's such a bad thing. There's nothing wrong with that, okay? So that's a whole different topic. Maybe we could talk about that in a different video if you're interested. But that's just something that I just wanted to mention. Mortgage rates, this is going to be a big burden on people. But check this out. Rates for home loans declined for the third straight week in line with the broader bond market, but not in time to help much of the housing market, okay? So these rates are coming down just marginally. Of course, it's not that significant, but it is a decline. So what you look at it on a broader scale, you're going to be able to find out the fact that these have been increasing. Okay, so as the Federal Reserve has been increasing interest rates, this has resulted in making it more difficult for people to pay. Okay, so if you have a variable, you're going to feel it right away. If you have a fixed rate, you're going to have to feel it eventually. Okay, so people are, refinancing after that 5-year period. They need to get a new rate, and suddenly, oops, well, here we go. We have a problem. So that's obviously becoming an issue for a lot of people out there who were getting these homes based on the fact that mortgage rates were very, very low. There's no way they're going to be able to continuously pay higher and higher rates. It's just not, they're not able to afford it. Okay. So that's the situation going on with the United States. But it's not much different than what we're seeing in Canada. Depends on where you look, of course. What I'm about to show you is an absolutely ridiculous scene. Okay? I hope you didn't see that amount over there. I wanted to surprise you. What do you think would this place right here, burnt down, just completely trampled, what do you think it's worth? Now, obviously, you can try and calculate, okay, we got some scrap metal in here, maybe some scrap lumber, put it all together. What do you got? Maybe the contents inside. Who knows? Okay. You can try and do that, or you can just say, look, it's worth the land that's underneath it ultimately. So this is in Vancouver, Canada. This is a very, very expensive area. No doubt. Prices are very high. What would you say this would be worth to you? And if you didn't see, I showed you at the top over there, but what do you think? What would something like this be? It's a piece of land. It's not a big piece of land at all. It just literally just fits the house on it. There's no land. Maybe you get a little patch of grass in the front, a little patch of grass in the back. All right. $4 million. $4 million for this little patch of land. Now, people get into these modes of euphoria, and they never know how bad it is until you're looking back in the rearview mirror. The dot-com boom and bust, people were riding that all the way to the moon. And then they realized they forgot their parachute. And on the way down, it was so much faster. Look at this. This is actually the fire itself that brought this building down. And a lot of people, they don't realize what they're dealing with today. The prices people are paying. People are paying $4 million. That's the asking price. It might actually go for higher. But what exactly are you going to do with that $4 million of house? I mean, that's a lot of money. And it doesn't bring you any income. People are spending way too much money on something like a house today. If you're going to spend $4 million, I mean, that thing better be in the best location in the world. You better have 30 acres, and it's got to be waterfront, and you have to have everything you could have ever imagined on the inside of that thing. I mean, it's millions and millions of dollars. The problem I have is that it's not as if that person earns millions of dollars a year. I guarantee you that person is going to have a massive, massive mortgage. So maybe they're upgrading. They have a $2 million home. They're going to buy a $4 million home, something like this. And we're seeing that all the time. I mean, in Toronto, I see it all the time. Average people, working class people, they have $1 million mortgages. $1 million mortgages. A lot of people think that's okay, and I'm not going to change my mind about it. I'm not. I've seen the comments before, and it's not reasonable to have $1 million mortgage when you're earning, median salaries, even a little bit above that. I'm not going to agree to that. Metro Vancouver real estate prices are 65% overvalued. That's according to The Economist. Okay, so the global index rates Canada as the third most overvalued country for home prices. I've shown you the index actually not that long ago, but this is showing us here 65% overvalued. I mean, that doesn't surprise me at all. You can see it. Look, it's a nice place. Okay, you can see Vancouver. You can say, wow, this is a beautiful place. Let's just pay whatever amount we want. And I don't think that's reasonable. And eventually everything returns to the mean. It is a fact. You can deny it for a period of time. Things can go on for decades, but it must return to the mean. Now, this is talking about Toronto here. At least 40% of the renters are putting 30% or more of their income towards rent. That's a common benchmark for unaffordable housing. Imagine this, 30% or more of your income goes to your rent. 30%. If you're earning, let's just round numbers, you're earning $100 a month, $30 goes to your rent. What does that leave for food? What does that leave for energy? What does that leave for, you need to go out, you need to do this and that. There's not much left. 30% is a very significant amount. And in fact, what they're saying here is that it's a common benchmark for unaffordable housing. Unaffordable. Sure, they can technically afford it. It's 30% of the income. Yes, they can afford it. They can buy the home. They can rent that property at $4,000 a month. But what does that mean in terms of, what they're actually able to save, what they're able to afford? Are they able to invest, or are they going to be paying down that mortgage for the next 30 years in hopes that they maintain their jobs, that their salaries increase at the rate of inflation, and that they are able to do the things that they need and not go further into debt? Okay, we've got a big problem here. We've got a very, very big problem. Look, Ward 23, which is, this is, if you're not from around here, it's Toronto, but it's not like the downtown part of Toronto, okay? So not like the most expensive area by far, okay? 58% of your income is going towards rent. Does that seem sustainable to you? I know a lot of people who invest, they'll say, well, it's been increasing for the past 20 years. Shut your mouth. All right, fine, I'll shut my mouth. Let's move on. Looking at this is an interesting infographic, actually, if you're from Canada or not. I just think is really good. You could see buyer's market, balanced market, and seller's market. It's going to break it down. I'm not going to get into the whole thing for you, but if you just want to look at this, there's a lot of places in Canada that are way too expensive. If you're an investor, you might want to look at other areas except for Vancouver, except for Toronto. You might want to look around into the, let's say, I don't even want to use the word suburbs, but let's say on the outskirts, or maybe just look at the East Coast, for example. Totally different market than Vancouver, as an example, right? So you're seeing different markets appearing here. Looking at, for example, here, Ottawa is in here, Montreal. Somebody just asked me, can you do a video on the Montreal market? Well, here you go right here. Average home price right now is almost $400,000. Seller's market, 73%. So that is very, very significant. Sales to new listings. Okay, that's what we're talking about here. And then I can take this, I could scroll down and I could see it listed over here. Buyer's market in Newfoundland and Labrador, going comparing July of 2018 to July 2017, year-over-year change, and it goes down throughout this whole list, all right? So that's something I don't want to cover too much. Now, my friends from all over the world, I've got people from literally every country in the world watching on a daily basis. I want to say hello to all of you. This channel is growing incredibly fast right now. In fact, in the last 30 days, it's more than 13,000 new people. Okay, so we've got massive amounts of people coming in right now. I want to say hello to each and every one of you. So we've got friends in Berlin, Lisbon, Copenhagen, New York, and so on. There is so many people that are focused in the areas where there's massive quantities of population. Okay, a lot of the people that are watching tend to be in the major cities. Okay, that's just the way it is. Not everybody, certainly, but in the major cities. And all these major cities are so expensive. But you can see here somewhere like, I mean, it all depends. It all depends. This is showing us basically the dot. If you can't see, it might be a little hard to see. This dot here is 2011. So that's where the index is at 100, and they're trying to say like where it has gone since. An area like Vancouver, despite the fact that up until 2011 it was increasing, I mean, it's been increasing ever since. It never really stopped. Hong Kong, same situation here. Zurich definitely has increased. It's been a slower rate than some of the other places. New Zealand, Auckland, New Zealand is just going crazy. Tokyo actually is pretty much flatlined at this point right here. Milano in Italy is declining. They're dealing with their own issues right here. But in general, I'm noticing a lot of places are simply getting more and more expensive. Okay, so this is really unbelievable to see where it has gone. I just want to give that information to you. You can see it for yourself right here. I can't cover all of them, but I've got people in Lisbon, by the way, very beautiful city, that has, it's showing a flat line in here, but percentage change on the 1 year is increased 4.7%, on 5 years 17.9%. So it actually, although the map doesn't seem to be showing me that, regardless, I'm looking at this, seeing different areas of the world increasing tremendously. Most places increasing, but some of them have become more cheap in the recent past. Well, we need to address the fact that, is it still cheap in compared to what people earn? Okay, that's the way I like to really break it down. So this has been a very long video. I hope you found it informative. If you did, please give me a thumbs up. Let me know where you are from around the world. I want to know the real estate prices where you live. Are they affordable, unaffordable? I just want to know the details. Share them with the other people around the world. This is the only YouTube channel out there that actually values your comments. Can you believe it? Wow, what a world we would live in if we actually valued other people's opinions. Wow. All right, so that's all. Please give me a thumbs up. Helps to support me. If you want the financial education that was not taught to you in schools, these two books have it all. I talk about real estate in both of these books. You can check them out. Link is in the description of the video. If you're more interested in the audiobook version of Global Economic Collapse, you can get that at themoneygps.com.